Okay, welcome back. It, it's Bose and Back Capital. I'm here with another one. As I promised, I said that I'll show a real chat example of the break of structure and the change of character and how we can use it as a confluence to enter our trades because market structure provide basis for our directional bias. Like if the market is creating higher highs and higher lows, it means we are in an uptrend, right? So our initial bias will be buys until we see a change of character. Likewise, when we're in a downtrend creating lower highs and lower lows, our initial bias will be sells until we see a change of character to the upside. Now let's get into the charts, and our selected pair is the Australian dollar, Swiss franc. Okay, let's start with the higher time frame because we are going to do a top-down analysis on market structure because the market is fractal in nature that every relative time frame shows what is happening, what price is doing, so that it can help us better understand the markets. Okay, so when we take a look at this, uh, initially the market was in a lower low and a lower high and lower low situation, that is a downtrend. The market was creating lower highs, lower lows, lower highs, lower low, lower high, lower low, lower low, lower high. But in this zone over here, the market started creating consolidation, a zone of consolidation where it broke down to the it broke structure to the downside, broke this previous low, created a new lower low. But here is where we see all of these are breaks of structure, break of structure. But when price reaches here, it moves impulsively to the upside and it breaks this structure. So this will be a break of structure as well as a change of character right over here. Okay. So I'm going to just reload. Excuse me. Nice network. Something wrong with the network. Okay, right there. Sorry for the delay. Right, price broke structure right over here. Okay. So this will be our daily 1 day break of structure. But it is also slash change of character. Change of character. Why? Like I said previously here. Okay. I think we move to a lower time frame. So yeah, right over there. Clean. Okay. Uh, like I said that a change of character happens right over here when the market is trending upwards and then price breaks structure to the downside, closing below that previous higher low. And if it is in a downtrend, price breaks structure to the upside, closing above that previous lower high, creating a new lower. That is a new lower high. Sorry, a new higher high. It is a higher high, no longer a lower high. It is a new higher high. That is exactly what happened here, and it created this new high. New high. Okay. New high. New high. Right over here. New high. Okay. So from this point, from when price breaks structure to the upside, in the daily time frame, we have to move lower and price break that structure. Then we have to start moving to a lower time frame, a relatively lower time frame, so that we can look for our buying opportunities. Likewise, start considering the market structure in that time frame we are in. Okay, so from this point, the market was creating a series of higher highs and higher lows, higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, Okay, there is something that happened here, that is a change of character, but let's talk about this break refractor and this change of character over here. This change of character here signaled that the market can now provide buying opportunities. Okay, so when we move to the 4-hour time frame, we can see this clean order block created here with some imbalances. A price retraced, did not mitigate that order block, moved impulsively again, broke that structure. Now when something like this happens, uh, we would be looking at buying opportunities within this price range, from here, from this price range. Okay, from here to here. Why? uh let's go back to that drawing. Okay, right over there. Now there's this thing excuse me, there's this thing called weak and strong market structure. Now, how do we define this weak and strong market structure? Now, if the market is trending upwards, right, it is creating a series of high highs and high lows, high highs and high lows. When the market, you know, moves impulsively, breaking this structure, creating a new high that is higher than the previous high, it means this higher low is strong. It is a strong low. Strong low. Okay, it is a strong low because it broke this structure. When it retraces and moves again impulsively, breaking this high high, it means this higher low is a strong low. Okay, it means when it happens again, like it impulsive price impulsive moves, breaks the structure, retraces, our but we will be looking for buying opportunities in this zone. We'll be targeting our points of interest in this zone over here. Come on, network is so disturbing. Hold it. Yeah, cool. Okay, yeah, we'll be looking for our, and this thing just kills the flow, man. Let's get into it. Okay, our point of interest, we'll be looking for our points of interest within this zone. Let me confuse you. Within this zone over here. Okay, not down here for the time being. For the time being, unless until this law over here is broken, or this law over here is broken, this zone over here is broken, that is when we'll be looking for opportunities in this zone. And to look for opportunities in this zone, we look at the price movement. Is the price coming down impassively, or is it weakening as it approaches our zone? And even if it comes impassively and we have the desire to trade, we're going to have to wait for a reconfirmation entry or a confirmation entry. Okay, so right here we'll be looking for our buying opportunities over here. So let's get back to the charts. Okay, as you have seen it, like this is the scenario that I explained up there, that when price broke this structure broke this structure and created a new high, it started retracing, but we will no longer be looking at this zone because this is a strong low. So we have to move to a lower time frame and look for opportunities in this price range over here. Okay, so we're let's yeah that we'll be looking for our buying opportunities in this. Let me mark that in higher time frame. Let me mark that in higher time frame. Okay. Uh, so let's use the Fibonacci. Let's use the Fib just to match the price range. Okay. So we'll be looking for our buying opportunities in this price range. Let's head to 1 hour time frame. Okay. So we say that we'll be looking for buying opportunities within this price range over here. Okay. Yes, sir. Okay, so let's take this away. Just okay. So what do we identify here? This is a clean 1 hour order block. This one was mitigated, so there is this order block over here. They sell, then the impulsively buy, that broke the structure. Now we'll be looking to take our buy opportunities right over here. This will have been a opportunity of interest from the open to the week. Okay, that would have been an entry. How much are okay from the entry, stop loss at the week. We will be targeting the previous high because it acts as a liquidity. Okay, so right over there would have been a 1 2 3. 1 2 3 not bad. A 1 2 3 for a quick trade. The 1 2 3. Okay, now let's take that away. Okay, so price then moved impulsively and then broke structure again, creating this new high. This new high, as I labeled it previously, new high. Price moved from this point of interest to this zone, whereby it created. I think that is the 2 hour. Let's take a look at the 2 hour. So it's it moved impulsively. Yeah, it moved impulsively. Broke that structure, created a new high. So we'll be looking for buys at this zone. Okay, price mitigated our zone for another entry. As usual, we target these highs, but in this case, price did not break this high, this new high. What did it do? It just swept that liquidity and then it moved down impulsively. It moved down impulsively. Moved on impulsively. And like I said previously, that when this high is broken, because this is a wick, like I wrote here. I mean, this was a valid order block. Okay, let me write that this is a weak low, weak low. Why? It is a weak low because it failed to break these highs over here. It is weak. That is why when price came back, it came back impulsively, broke it, and started moving towards that 4 hour order block that we had identified previously. Like I said, when those highs, when these lows are there, when these lows start to fail, then we'll be looking at our initial point of interest, like what happened here. And even when trying to look at this, we cannot go back directly and buy or sell it. But in this case, it's a buy because price came impulsively. So we have to move to relatively lower time frames and look for those opportunities to buy or to sell. Okay, I hope you understand the break of structure, the breaks of structure, and that change of character that has aided us to take those two buy trades. Okay, I hope you get value from this. Just be sure to press the thumbs up button, the subscribe button. Don't forget to turn on the notification bell. See you in the next video, and I'll be explaining institutional concepts such as supply and demand, order blocks, liquidity, fair value gap, imbalances, or market inefficiency or price inefficiency. And we'll be looking at entries, important things to look at when trading these institutional concepts, plus Wyckoff. Yes, further later we'll be talking about Wyckoff schematics. Yeah, okay, this is all for today. See you in the next video.